Well, in the first half of this year, when it comes to commodities, gold has been a bright light with a very solid bullion advance, helping a lot of the Canadian gold stocks. Energy has had a topsy-turvy time, especially recently, given everything happening in the Middle East. I want to bring Allan Small back for a continued conversation on the investing landscape. He's Senior Investment Advisor at Allan Small Financial Group at IA Private Wealth. So, Allan, let's start with gold, which is a little bit higher at this hour. Might be because the U.S. dollar, I think, against some currencies is a little bit weaker. You have the trade developments seen as a positive for stock market investors. I guess the uncertainty of the big budget bill in the United States is something else to watch. But what's your general view on this big move that we've seen from gold over the course of the year?
Yeah, so gold is an interesting investment. Obviously, many have made quite a nice return over the past year owning gold. I think there are some cross currents there. Obviously, with the one big beautiful bill that is looking to pass in the U.S. Senate, looking to perhaps, well, not perhaps, but definitely increase the debt levels in the U.S., you could see gold get a bit of a boost because of that. At the same time, I think if you look at gold versus trade negotiations, I think trade negotiations, if we do see some trade deals done by the U.S., which will strengthen the U.S. economy, strengthen the dollar, I think that is a bit of a, I guess, weakness for gold. You know, gold goes higher when there's chaos in the world, when there is that fear factor, when there is debt fears or inflation fears. If we get these trade negotiations or we see them working towards some resolutions with respect to trade between Canada, U.S., Mexico, U.S., European Union, U.S., China, U.S., all these things right now that are being spoken about, that would be a big negative for the price of gold. And I was on BNN, I guess, not too long ago, and we had a guest on from Citibank, and they were talking about gold dropping $1,000 an ounce to around $2,500 as a price for gold. And I'm not so sure we'll see a 1,000-point decrease, but I think it's very possible that you could see gold falling back. I know it's down about 5-6% from its highs today, under 3,300 versus where it hit once upon a time, 3,500. So I would be in the camp of seeing gold prices fall further as stability comes back into the U.S. markets and into the U.S. dollar.
And then let's compare that story to the oil story, where obviously we very quickly saw a surge in the price of crude as uncertainty in the Middle East continued to ramp up. The Iran-Israel truce, in many ways, has taken a big bite out of the price of WTI, which is right now back around $65 in the U.S. I know OPEC Plus members are ready to consider another increase to production, so that'll be something to be watching for. Not to mention what you were just talking about before, where things go with trade. So when you think of oil, how do you approach that right now?
Well, you can clearly see the war premium has come out of the price of oil, right? We saw oil get as high as $75, $77 a barrel on WTI, and now that has clearly come off quite a bit. And with I guess the talk about increasing production levels out of OPEC, with the President of the United States speaking consistently about bringing down oil prices, I think he would love to see oil prices down at around $50 a barrel. With that conversation, it is very difficult for me to see oil prices move significantly higher. I think the opportunity to see oil prices above 100 kind of came and went with the war in the Middle East. Now we're seeing a ceasefire. Obviously, if things were to escalate in the Middle East once again, you would see oil prices move higher once again. But for now, I would be, I have been a bit of a seller. I haven't had much in the way of oil investments for my investors, but those that did own some oil, we've been sellers into the strength recently. And as we've seen oil come down, as I said, I wouldn't be surprised to see oil dip below $60 a barrel in the coming quarters, in the coming months, because that's what the president wants. President Trump wants to see higher oil prices. I think OPEC will increase production. And I think the U.S. pumping oil at around 13-14 million barrels per day, even if they can squeeze out some more there's a lot of oil in the world. And I think right now, price of oil is going to keep oil stocks where they're at now and perhaps even a little to the downside.